I hope, is this on? Yeah, perfect. All right, so let's get started. Good afternoon, everyone. Thank you for joining us here in Geneva at Building Bridges for what I hope will be a very exciting and hopefully particularly insightful conversation on the governance of big fintechs and how to align that governance with sustainable development. Welcome as well to all our online participants. I know this event is live streamed and we have many people joining us online from around the world. So good morning, good afternoon, good evening, wherever you're joining us from. Welcome also to those joining us from the metaverse. I understand this is this new mysterious location online that is fashionable to recognize increasingly, so let me be done with that. And of course, welcome to our panelists here, both on-site and online. Due to COVID restrictions, some of the panelists were not able to travel to Geneva or wouldn't have been able to go back home after Geneva. So we totally understand that and are happy to have you online with us. Maybe before giving a brief introduction and before getting right into the topic, I'd like to give our panelists an opportunity to spend maybe 10 to 15 seconds to introduce themselves. I'm not sure if we have online panelists ready, so I'll just count on the technical team to make this happen. In the meantime, can we start with you, Alisa, perhaps? 10 to 15 seconds each, just brief introduction, and then we carry on.
Sure, thank you so much and pleasure to join you for this panel. My name is Elisa Cole and I'm the Managing Director of Governance Center, which is a think tank and advisory working on promoting good governance, in particular in emerging markets, working with investors, policymakers and other stakeholders in the ecosystem. And we've been doing some work on this topic, which we'll be discussing in just a minute.
Thank you, Alisa. Catherine?
Nice to be here. Catherine Foster, I am the Community Director of Open Earth Foundation and a Fellow of the Social Alpha Foundation, former diplomat turned innovation lead for one of the EU's climate programs, and then turned to looking at emerging technology for climate and SDGs, and happy to have served as the lead author of the first 3 papers in this series. Thank you.
Excellent, thanks a lot. John?
Hi everyone, John Frost. I am a senior economist in innovation and the digital economy at the Bank for International Settlements based in Basel, Switzerland, and I do research on fintech and digital innovation, relevant for the central banking community.
Thank you very much, John. Let me perhaps move online, and I hope you can see people who are online on the panel. Can I turn to you, Natalie? Great to see you. Happy that you were able to connect. Apologies that you were not able to join us in person and had to cancel your trip at the last minute, but fantastic that you could make the time to be with us.
Thanks very much indeed, Ayaz. My name is Natalie Jabangwa. I'm the Group Chief Digital Officer of the Sanlam Group, which is Africa's largest non-banking financial services firm. Our coverage spans across 34 Africa countries, plus India and Malaysia. Thank you.
Thanks, Natalie. Can I turn to you, Doug, from Hong Kong?
Thanks, Ayaz, and great to be here. Sorry that I'm not able to join in person and enjoy the event, but my best wishes to everyone. My name is Douglas Arner. I'm a professor at the University of Hong Kong and a senior fellow in digital finance and sustainable development. My team has worked across this project, I think, on almost all of the papers. So very pleased to be here and very pleased to have contributed.
Thank you, Doug. And last but not least, we have the immense pleasure of having with us Preeti Sinha, who's the Executive Director of UNCDF. Maybe I'll just let you come in, Preeti, and give a brief introduction as well. Welcome back to Geneva, a place that you are, among many places, fortunate to be calling home, I guess.
That's right, Ayaz, and good wishes to everybody there. Nice to see the Building Bridges Summit take off really well again. So I'm, as you said, the Executive Secretary of the UN Capital Development Fund. We are focused on financing in several of the least of the developed countries. Big focus on digitalization of economies, inclusive digital economies. My background shortly, banker for 30 years, investment development banker, lots of years in Geneva. So really glad to be here. Thanks.
Thank you very much, Preeti, for joining us. So before we get started and have that conversation, Perhaps a little bit of background and introduction. So we are here to discuss really the governance of global fintech platforms. And this journey started about 18 months ago when the UN Secretary General's Task Force on Digital Financing of the SDGs recognized that the massive acceleration in these global fintech platforms coming from non-financial sectors, whether it's from social media, from e-commerce, from ride-hailing services, mobile operators themselves across Africa, getting into payment services, this massive acceleration in global fintechs is having significant impact on sustainable development. And of course, there was a very good understanding of the positive impacts in terms of driving financial inclusion, in terms of providing access to financial services. But the negative effects of these global fintech platforms, the task force argued at that time, was something that we didn't understand well. And we needed not only to try and understand it, but we also needed to rethink how we address the governance of these platforms in a way that really helps us align them with sustainable development, particularly in developing economies. And that's how it all started 18 months ago. And now 18 months down the road, we're all here together with our panelists to actually share back with you the exciting findings, discoveries, the insights that we have been able to garner from multiple conversations, interactions with many stakeholders in the ecosystem, with international organizations such as the BIS, but also the IMF, the G20, the World Bank, etc., in really trying to get to the bottom of the issue. What are the governance issues we are trying to address here, and what are the solutions and the responses we can get? So that's precisely the topic for today. And thank you, everyone. And without much ado, before we talk about the content and substance with the panelists, I think we have an address that's recorded from one of our co-chairs. So the dialogue platform that has been running for 18 months, which has been supported generously by the Swiss Agency for Development and Cooperation, that I would like to really thank here, and we have Marcus representing them here in the room, is co-chaired by Governor Patrick Njoroge of Central Bank of Kenya and Akim Steiner, Administrator of UNDP. Governor Njoroge was not able to join us, unfortunately, but has been kind enough to record a welcome address for us. So if you would like, please to play the record address for us, and then we can dive into the topic and content with panelists. Thank you.
Excellencies, ladies and gentlemen, good morning, good afternoon, and good evening. I'm pleased to welcome you all to this Geneva convening of the Dialogue in Global Digital Finance Governance during the Building Bridges Week. At the outset, allow me to thank the Swiss Development Corporation for supporting the dialogue. I was privileged in October 2019 to attend and speak at the Building Bridges Week in Geneva, focusing on scaling up sustainable finance. Shortly thereafter, in early 2020, the world changed dramatically with the onset of the coronavirus pandemic. This pandemic has seen the acceleration of digitization. That has, to a large extent, ensured the continuity of essential services, including finance, health, and education. On the other hand, the pandemic has adversely affected the implementation of the Sustainable Development Goals, SDGs, particularly in health and education. Micro, small, and medium-sized enterprises, youth, and women have borne the brunt of the adverse impact of the pandemic. The need to scale up sustainable finance, that was a clarion call in the 2019 Building Bridges Week, has become even more urgent. If we are to salvage the vision of shared prosperity for all by 2030. With accelerated digitization has come the increased influence and dominance of the big fintechs. On the positive side, the big fintechs have enabled access to various services during the pandemic and supported MSMEs in their supply chain right through the pandemic. However, with their growing influence and dominance have come concerns on their technology centricity as opposed to people centricity. The transnational reach of the big techs poses spillover risks, particularly to emerging and developing countries who are not at the table when the governance of these entities is being deliberated on. Further, the growing customer base of the big fintechs in emerging and developing countries may not understand how their data will be used by these entities. Today's panel themed Big Tech and Sustainability, the Necessary Convergence, is therefore opportune in seeking to assess how big fintechs can contribute to sustainable development. This is aligned to the objectives of the dialogue that was established primarily to advance governance innovations, which take greater account of the SDGs impact of big fintechs and are more inclusive of the voices of developing countries. To address these important issues, we need to cooperate in more ambitious ways. And I'm glad that the dialogue has laid out a clear plan for us to explore. My expectation is that we will all come together with many other partners to now advance the implementation of these recommendations. We appreciate all those who have joined us today and look forward to fruitful deliberations over the next 90 minutes. Ladies and gentlemen, we have a unique opportunity to design what the global governance of big fintech should look like in a way that is supportive of sustainable development, particularly in developing nations. An opportunity surely not to be missed. I hope that we can seize this momentum to make digital and big tech work for all people and for a sustainable future. Thank you very much.
Thanks to the technical team, I would like to take this opportunity to thank Governor Patrick Njoroge for all his support and leadership to the dialogue over the past 18 months. Let's dive right into the topic, and maybe I would like to start with you, Natalie. I hope you can come online and unmute yourself. You've been the CEO of a global big fintech platform in Zimbabwe, and in many different ways, you have some first-hand thoughts on the potential risks, but also the benefits that big fintech can bring to a country like Zimbabwe. And so I would like to really hear from your experience. What are your views on the risks and benefits? And also from drawing on your experience with the regulator, do you feel we're regulating big fintechs today in a way that really helps maximize the potential? Over to you, Natalie.
Thanks very much indeed. I think in terms of the benefits, amongst many, I'll just touch on 4. I think it goes without saying that technology allows us to reach scale. It allows us to reach people that we've never been able to reach before in traditional finance. And secondly, what it also allows us to do is to be able to harness the power of data that comes from those huge scalable bases that we can reach. And as a result, data that is accumulated from reaching that scale allows us to be able to design for consumers exactly where we can meet their needs. But finally, I think what is fantastic about it is that not just does it provide financial inclusion, it actually allows us to deepen access to more advanced financial services for the people that are at the bottom of the pyramid who've never been a part of the formal banking services sectors. And for most African countries, if you see the trajectory of mobile money, they're contributing largely to the transparency and accountability factors of informal sector liquidity. But I think there are problems that come with that, and those are the risks, and I'll just touch on 3. And on those risks, I think monetary policy is not yet ready to embrace the new methods that are at the coalface of big tech. And we've seen this with the advent of Facebook and many other cases that we can talk about. As you know, Ayaz was running EcoCash in Zimbabwe, which was contributing 70% of the country's GDP. And I think at the start of the pandemic, we saw new pressure for regulation to ban all mobile money agents. And this really actually reverses the gains that we will have made in being able to create jobs. And I think secondly, we actually have to be able to also encourage private sector to assist in value creation, where we can use the liquidity that still sits in traditional finance as open mechanisms for financing small to medium enterprises and ensuring that we actually fortify the informal services sector. But finally, I think it is key that we see further collaboration. There's still a lot of fragmentation between private sector players, policymakers, and big fintechs. Thank you.
Thanks, Natalie. And you've also been part of the UN Secretary General's Task Force on Digital Financing of the SDGs, and have been instrumental in shaping this agenda. So really great to hear from you. I'll come back to you a bit later to hear your perspective from your new role, which is something slightly different, but will bring a different angle. I'd love to turn to John now for a second, or for a few minutes, actually. John, you've been doing a lot of work on big fintech and big tech in finance. At the BIS, and you've been looking at their multiple impacts and effects on market integrity, financial stability. What are your views on the kind of impacts and effects that big fintechs are having in the world today, not just on financial stability, but also beyond on sustainable development? How are you looking at it?
Thanks a lot, Ayaz. And first off, really, congratulations on everything you've been doing in this dialogue. I think that it's been, extremely valuable to bring together all these perspectives, to allow, for a discussion on the impact on the Sustainable Development Goals. And from the BIS perspective, we've also been working on big tech and finance and emphasizing the importance of cooperation with others. So I've been really happy to be able to interact and be part of this. So the research that we've done on big tech and finance has shown a few things, and I think it's broadly consistent with messages we've been hearing about here. There are benefits and there are risks, and a range of risks from different policy perspectives. So on the benefits, I think it's very clear that big techs have enhanced financial inclusion in very concrete ways in a number of countries around the world. And I think that this progress has to be acknowledged. I think that if we look at what's happened in China with the large payment platforms and how many people they've brought into the formal financial sector, if we look at what's happened across Africa with mobile money providers, if we look at what's going on in India with mobile payments, and in much of Latin America also with mobile platforms, I think that there is real progress, and big techs have helped to lower the cost of onboarding new clients. They've made services more convenient, and they've offered services in ways that are really powerful and effective, especially for lower income users in many countries. But the same forces that have allowed big techs to scale and to enhance financial inclusion also tend toward monopoly. And this is a very clear issue, and this isn't theoretical. In China, two platforms control 94% of the mobile payments market. In India, three big techs are responsible for over 90% of the transactions in the unified payments interface. In Kenya, we've heard lots about the successes of M-Pesa, but it shouldn't be lost on anyone that the Competition Authority of Kenya had to actually take measures from an antitrust perspective on M-Pesa. So I think that in the research we've been doing, we've shown empirically that there have been a number of benefits, and financial inclusion has certainly benefited. But going forward, there are risks from a range of different policy perspectives. I mentioned competition policy, so antitrust. But for the BIS and for central banks, financial stability is an issue. We know that banks can become too big to fail, and we've seen that big techs can become too big to fail. And if there were an operational incident or an insolvency of a large big tech, we could have many of the same issues that we're very familiar with from the global financial crisis more than a decade ago. We also have seen data privacy issues. I think Natalie also touched on this already, that the use of consumer data can be very valuable, but consumers may not always know and be comfortable with the ways their data are being used. And I think, Ayaz, in the dialogue, there have been a number of statements regarding taxation, regarding environmental impact of big fintechs. So I think that this really concerns a lot of authorities, and I think we have a common implication or conclusion from this, which is that authorities, the public sector, needs to work together, given that each of us is looking at these issues from a different mandate, and there is a need for an open dialogue also with the private sector and civil society about these impacts and how to shape the governance of big techs going forward.
Thanks, John. And it's really exciting to see the BIS actually sharpening the lens and the focus on that particular issue and starting to really look beyond market integrity, financial stability, starting to look at more digital governance related issues and potentially sustainable development connected issues. And that's sort of a perfect transition to Catherine. You've been instrumental in helping us really understand what are the sustainable development impacts and effects of big fintechs. And so why is this an issue today? Why are we discussing this at Building Bridges in a sustainable finance event? And why is it so complex to understand the impacts, and particularly the negative ones? Because the positive ones, we can see some of them. They've been highlighted already. But why is it so complex to understand the negative impacts of big fintechs? Can you help us understand that?
I'll try. It has really been a pleasure being a part of this and also working with the BIS on Project Genesis, which is taking that digital retail bond end to end, which is really a key outcome, I think, of all of this research as well, and very much can link into it. But coming back to where we are in terms of understanding big techs in the financial space, i.e. big fintechs, we have to start with that. And you made that note that it actually is technology companies that come from outside, largely the financial sector, that are having an impact. They are crossing sectors, they are crossing geographies, and their business models are very complex and integrated, and they use digital technologies in order for that to happen. And it means that their various offerings become entrenched and integrated, meaning that we can't actually just go down one specific route of regulatory space. Similarly, we cannot go down one specific route of understanding their sustainable development impacts. And one of the key elements of understanding what the SDG impacts are is getting beyond that positive narrative of the fourth industrial revolution and digital inclusion to recognize the broader perspective, the complex business models, that cross-sectoral nature, and the integration of that business model that is actually creating this type of inclusion, but also creating new impacts that we cannot understand across the economic, social, and environmental sides. So we have found a number of key core impacts that couldn't have been examined previously from the financial sector that are now we have to have a look at.
Can I ask you to elaborate a little bit more and perhaps just pick an example, a concrete case of e-commerce, for instance, and how you're thinking about the positive and negative impacts of e-commerce, just to unpack it for us and help us to tease a little bit more out of you and the work you've done.
So what we had to do is look into specific cases. We couldn't find the data, despite the data on individuals being readily available within the big fintechs. That data is not readily available in terms of understanding impact. So we had to go case by case and also look at other types of data sets through that sort of SDG, ESG lens. And we looked at e-marketplaces, for example, where they certainly are allowing new producers and new business models, local entrepreneurs to integrate into a sort of a global economy, if you will. But on the other side, what we're seeing is this widening gap of understanding the climate impacts, the environmental impacts, the human rights and labor impacts. So with 50% of goods and services on e-commerce marketplaces being offered by third-party users, there is no data available on those third-party users. So what we have are marketplaces like Amazon's and others saying, look, we're looking at our own product and supply chains and really sort of tightening those in terms of climate change and sustainable development and human rights. Meanwhile, in the back door, 50% of what's happening on their marketplaces isn't being accounted for and actually is a widening gap. And we found quite a few incidents and cases specifically violating human rights laws or sort of pushing the climate boundaries, shall we say.
Thanks very much for enlightening us, Catherine. I'll come to you in a second, Alisa, but I'd like to turn to Doug Arner. And I'd like to wear a regulatory lens or a policy lens for a second. Doug, we hear about antitrust actions in the US against the big tech companies in finance. We hear about how the Chinese regulator has actually cracked down on big fintech platforms in China. There's a lot of things happening in the EU, in the UK. We are not short of policy tools and regulatory tools to be able to address the sustainability alignment of big fintech platforms. So can you tell us a bit more about what are some of these tools that we are having in our hands and what's missing? Why is it not working? Why is it still a major topic of debate when we talk about alignment of big fintechs with sustainability? What is missing today? Can you tell us about that?
Thanks for that, Ayaz. And yeah, I think this is a really important point. And if we look at just a few different events across 2019, 2020, we can see, I think, the culmination of a number of trends. If we look at Facebook's announcement of the Libra proposal in 2019, if we look at the onset of COVID and the digitization that is driven around the world, if we look at essentially China's governmental regulatory framework that is being built for Ant and other big fintechs, what this essentially highlights is, if we look back over the past decade, the 2010s, we can say that we are often looking at new technologies and lots of questions about doing things differently. But by the beginning of the 2020s, by 2019, by 2020, the trend towards size and scale had really emerged. And that really highlighted both the advantages. And I think John's point about real impact is very important. We've seen this both on the payment side as well as on the lending side. And in the context of COVID, that digital access has probably been our single most powerful tool in addressing lockdowns and economic damage all across the world. But at the same time, what all of this has highlighted is that many of the regulatory frameworks which have evolved over a long period of time have not been designed to deal with the sort of scale, both on the beneficial side, but also from the standpoint of risk. So if we look at financial regulation, well equipped from the standpoint of financial stability or market integrity or consumer protection, but less capable from the standpoint of sustainable development, though beginning to change. If we look at data, effective from the standpoint of privacy, cybersecurity, but less so from the standpoint of thinking about how we can maximize the benefits by enabling data to support different forms of activities and inclusion. Competition, big focus on consumer benefit, but without looking at the sort of disadvantages that can emerge from winner-takes-all models. And of course, the corollary of a winner-takes-all model is eventually a complete dominance by one or a very small number of firms. And finally, when we think about tech or communications regulation, often a focus on standards, on openness, on innovation, but less so from the standpoint of the sort of level of critical functions that these technologies are now playing across our societies. And so I think the key point here is that we've seen tremendous benefits from aggregation and the emergence of digital finance platforms and big fintechs. But we are seeing increasing risks, and none of our individual regulatory frameworks is really set up to deal with those. And so the clear need is, one, to see what is missing, and two, how we can tie all of the pieces together.
Thanks very much, Doug. And I'll come back to you in a moment, a bit later, to actually start paving the way forward and talking about how do we address those gaps that you just referred to and mentioned. But maybe one area that could be interesting to explore is corporate governance as well. We are talking about international governance and regulation of big fintechs, and obviously there's some challenges that Doug highlighted, and John also spoke to them to a certain extent. But what about corporate governance? And Alisa, you've been really helping us deep dive into the corporate governance space. Sustainability is actually making its way into corporate governance. Is it somehow idealistic to think that big fintechs could self-regulate themselves? What are sort of the key issues that you're seeing in this happening? Is it sort of their ownership structures that are so radically different with, you know, teenagers, potential, and sorry, I don't mean that with disrespect. Teenagers are fantastic. They are the innovators of tomorrow, and they're actually bringing fantastic solutions to the climate and the biodiversity challenge. But is it sort of about individuals rather, owning a company and being able to decide of the destiny of that company and the impacts of that company in their soul, in sort of their individual soul capacity? Is it about the way investors are able or not able to influence these organizations towards more sustainability? What are the key issues? Can you highlight us a bit on this?
Sure. Thank you so much, Ayaz, for the question, and also for inviting me to be part of this dialogue. And we've co-written one of the papers that I think you can probably download on the website that deals with corporate governance aspects and that actually echo some of the comments you were making earlier, but also what John and Doug was mentioning is that generally speaking, the questions that regulators have been asking around the impacts or SDG or other impacts of big fintechs have been sort of predominantly taken from a competition perspective, whereas we think, and we highlighted in the paper, a number of the mechanisms actually need to target specifically the conflicts of interest that big fintechs face, and therefore require a little bit more, in our view, nuanced and sort of governance-related solutions. But back to your question, Ayaz, about sort of what are the challenges? Is it teenagers? Is it others? I think definitely, like sort of to pick on the point you started making on the ownership structure. That is something very interesting when we look at the world of fintechs, and it's not a problem that's of course limited to the world of fintechs, but it's I would argue pronounced in this world. If we look at the ownership structure of companies like Alphabet, if we look at Facebook and others, we see that a lot of these companies, when they went public, and it's actually written out in the prospectus, if you read if you go back to the underlying prospectus of Alphabet, it basically said, you're investing in a company of which majority shares are held by two individuals who call the shots. So when you buy into these companies, you buy into the cult of the individual. And of course, we know that it's also the case with the Teslas of this world. And I've written some pieces in the media that talk about this idea of dominant CEOs and the risks that that sort of culture breeds. And again, that's not something limited to the fintech sector, but it is something that's pronounced. And there's been quite a lot of research that, for example, some Harvard researchers have been putting forward, talking about dual class shares and multiple class shares, and the fact that, if you again go back to concrete example, in the case of Alphabet, Jeff Bezos basically holds 66%, I think, if I remember correctly, of voting rights in the company, and so can effectively outvote any resolutions that are put forward by employees, by other stakeholders, well, other shareholders in this case. And so when to highlight some concrete examples, when Amazon employees put forward some climate-related resolutions, they were basically defeated without any conversation, really. So there is an issue of, I would say, ownership structures, and I think what's interesting in this context to mention is that this ownership structure conversation is a broader conversation where stock exchanges currently are facing a lot of pressure to compete, and when companies like another example outside of the sector, Aramco, for example, when it announced that it will list, the New York Stock Exchange said, fine, we'll tweak some of our listing standards to welcome you. So there is this kind of competition, which also then affects the ownership structure of tech companies and allows them to basically go public with let's say, less stringent governance requirements, whereby markets like the London Stock Exchange with its premium listing segment used to have things like, or still has things like, for example, minority shareholders being able to appoint directors and boards and whatnot. So these are there are broader, I think, mechanics or dynamics that are go beyond the sector that also facilitate certain ownership structure concerns. That then I think the second part of your question is, what about the other stakeholders, and how is their voice heard or not heard, therefore, in the governance of these companies? And then, of course, the question comes back again to this ownership situation, but also other legislative or regulatory developments that we've seen more recently, like the PAC legislation in France, but also regulatory frameworks that allow, for example, in some companies or in some countries, employee nomination on boards, or allow advisory boards to be formed, as we'll talk about in the case of Facebook. And so there are some mechanisms that potentially, and I guess we'll dive into that in a second, be used to include other stakeholders, which is arguable, I would say, at this point in time, to what extent they're included in a conventional corporate governance model, which is predicated on CEO, C-suite, and a sort of a conventional board of directors, where some of these new tech skills and sort of sustainable development skills, if you look at surveys of boards of directors, are typically not actually the strong points of boards. So I don't know if that answers your question.
It did, and I think I would like to really explore with you in a second round, perhaps, some of the emerging voluntary mechanisms that you're actually seeing that could be helpful. We are seeing a lot of new generation of innovators today that are actually really paying a strong attention to governance, and that's happening in the blockchain space, that's happening outside of the blockchain space. So there's this new generation of entrepreneurs that are really bringing in a strong governance lens into what they're doing, but that's not happening yet, perhaps at the big fintech level. And it would be really interesting to see to what extent is it happening, and is there a solution space in the corporate governance space that we could actually explore. I think we have Akim Steiner joining us from New York, and I'm very excited. I don't know if you're already online. Hello, Akim. So you're on mute, we can't hear you, but welcome to Geneva.
Thank you, Ayaz. I can hear you loud and clear. I hope you can hear me, and good afternoon to everyone.
Yes, we can hear you perfectly. So it's great to have you. So for everyone, Akim Steiner is also the co-chair of this dialogue, and he was also chairing the task force on digital financing of the SDGs. Just by way of background, very briefly, Akim, we've been talking with the panelists so far about some of the issues that we have been unveiling around big fintech impacts, either positive, negative, some of the challenges we are currently facing in assessing those impacts properly across sustainable development, and also some of the policy tools that we have at our disposal and some of the limitations. So this is sort of where we are. We'll have a second round to talk about solutions and ways forward. But I think this is a great time to have you with us online. I know you have a few minutes with us. So we'd love to hear some inspiring words from you as we proceed with deliberations. Over to you, Akim.
Thank you, Ayaz. And I feel more like an intruder because I was following the last, I think, 8-9 minutes of the panel, and inserting an address by somebody who has not been there from the beginning of the conversation is always a challenge. I also want to, just recognize, first of all, Patrick Jerobo, who I know addressed you already, who has been such an inspiring co-chair. Also, my dear colleague Preeti, I know she's online. I can see her, with whom we in UNDP and UNCDF are now really continuing that work that the panel, that high-level panel that you referred to, kind of began to sketch out. And I want to also recognize SDC, because it was Swiss Development Corporation, the Swiss Agency for Development Corporation, was actually the one who picked up very early on the panel's many question marks that it raised when it came to how do developing countries deal with a technological and financial revolution that is happening outside their borders, but is in fact, as many of you have already described, playing out within their national jurisdictions. And I see Natalie also there. Natalie, I know that you were supposed to be in Geneva and are now probably somewhere in Southern Africa. It's good to see you because you were one of the inspiring members of that panel. So colleagues, just to say, when we look at these discussions about governance and big fintech, I think we are confronted by extraordinary possibilities and unprecedented challenges. This is how I would, in a sense, describe it. And, a challenge does not necessarily imply something negative, but if it is not recognized as a challenge, you leave it essentially to a lottery to become either a positive or a negative challenge. And I think much of what you have already been discussing, what we have tried to also pick up on, the evolution of fintech in the context of development, but also particularly for developing countries and economies, is something that I'm very glad that has also become part of the Building Bridges Week that is now happening in Geneva. And how we better align investments to the global goals as well as entrepreneurship in emerging markets runs almost like a red thread through all of these discussions. And in much of what we have done, and Patrick, I again want to acknowledge his leadership here in this dialogue, was to examine how countries are increasingly leveraging the incredible power of digitalization. So it is very much a positive agenda with which to engage. And to me, Natalie's work in Zimbabwe was always an illustration of how just I don't remember the number of years, Natalie, but I think it was 3-4 years, the financial inclusion percentage literally pivoted from 10 to 90%. So, there are, and we have seen this also in the context of, for example, the COVID-19 response, this extraordinary shift in other countries like Honduras or Nigeria, where also the United Nations assisted governments to use digital finance to support critical electronic cash transfer programs in these lockdowns as they took hold. And this benefited millions, hundreds of millions of people, if you probably look at it on a global scale. But one issue that has stood out in these discussions has been the role of innovation, digitalization, and fintechs in driving sustainability, because just growing a industry, a market, a platform is, a numerical phenomenon. And, growth, as we are increasingly also finding within our rethinking of development in the 21st century, is too singular a lens through which to look at this. So does the prospect of big fintech actually also enlarge the prospect for sustainability? And that's focus, I think, speaks to the stark reality that we are neither on track to reach the SDGs by 2030, nor have we really cracked the question of how do you govern a phenomenon, and I call it a phenomenon, that in many instances has, in just a few years, outgrown the size of national economies. And yet at the table of who actually is regulating big fintech, who is overseeing it, there was for a long time no one. Then the G20 economies began to look at it, the OECD, some central banks, and suddenly in the last, I think, 2-3 years, we have seen also with cryptocurrencies emerging a scramble for this. But the reality is that in some ways it is technology that was writing the rules of the game, and that technology very rapidly became concentrated in very large singular or few operators in a market. So I think for many developing economies, they are at the moment takers of something that is beginning to change their local economy without ever having really had an opportunity to sit at the table. So to correct course, I think we do now need to work at much greater pace to identify and deploy innovative solutions, forge new partnerships, and examine the role of fintech to channel the level of financing we need towards the 2030 agenda. It is not the singular, but it is certainly a very useful lens through which to look at whether this capacity to move money, to reach many more people, to provide platforms, can actually deliver more than just that quantitative leap, that pivoting forward. And that's why I would urge us all to take the SDGs for a moment and use them as a kind of lens through which to examine big fintech, because not only does it begin to raise a number of important questions that are central to a developing economy right now, and it's not just inclusion, but certainly that is a critical part. But it also provides, if you want, a universal language with which countries that have all signed up to the SDGs can actually have a conversation with each other. Because jurisdictions, or the non-existence of jurisdictional authority, is obviously going to be a great part of this conversation. In many ways, the world is now in the midst of this great reset in how it approaches key areas like digitalization. The challenge is really to set the conditions so that digitalization can drive forward sustainability. And perhaps most prominently, we are seeing the emergence of a new form of cross-border digital finance platforms, the so-called BigFintechs. And just to give you one example that is, to me, intriguing, when Amazon makes a decision in the United States about its business, that could hinder or stop the ability of its 300,000 resellers in developing countries to make a living. Whether they were benefiting from Amazon in the first instance and are suddenly cut off, whether it is also, I think it was Amazon that suddenly decides that it will no longer accept a particular credit card in the UK. And there are extraordinary decisions that are being taken purely from the vantage of a commercial operator in a market. And I think that is in part the scope with which we now are dealing with. And, I lived in Nairobi, as many of you might know, for 10 years. And to me, it was fascinating to observe that an app called Uber that I had not ever used while in Nairobi suddenly permeated the Nairobi taxi market overnight. Now, was it to the benefit of the consumer? Was it to the benefit of the taxi driving profession? Was it to the benefit of the economy? I think the judgment call is still out, and we see it with Grab and Careem and so many other platforms. They support financial inclusion in part. They create local jobs and livelihoods in developing economies, no question about it. Yet, do they also displace jobs? Do they contribute to poorer working conditions? And studies have shown that some of these mobility services actually result in 60-70% more pollution than the transportation choices they displace. So this is just one illustration of how an SDG perspective very quickly gives us not maybe 360 degrees, but close to it, a way of looking at this. And for the past 18 months, the dialogue on global digital finance governance has explored precisely these opportunities and risks. And Ayaz and the team, I want to thank you again. And also with Priti, we have, I think, been proud to see how this dialogue has evolved, how the issue papers or the papers that were published have really begun to reflect a broader conversation that is now popping up everywhere. Our aim was to seek ways to ensure that big fintech plays a more active role in channeling these much needed resources that we often refer to, the over 400 trillion of global financial wealth is there today, into some form of alignment, first of all, with a broader set of sustainable development goals, but also in jurisdictions that traditionally rather, would simply be left by the wayside. And there is obviously a scope in terms of mobilizing domestic financial resources, but at the end of the day, we operate in a global financial system. So making the link between these is extremely important. And in discussing the findings of the dialogue, and specifically the 7 technical papers that bring these new perspectives on the nexus between BigFintechs, sustainable development and governance, I think will hopefully carry us very quickly to a point where, first of all, the global discourse is far more inclusive. This was the principal preoccupation of UNDP at the time of the panel, because clearly, if we don't invest in that, if we don't assist countries to quickly gain the financial, but also the governance literacy that is needed in order to understand how this new technology is going to spread and how the absence of agreed rules may well leave them simply as passive observers, was critical. And the findings include the publication of these 5 guiding principles that you've already touched on, and underpins a kind of new global governance discourse on big fintechs that address these broader perspectives. So let me just say these findings suggest that we are not short of tools or new ideas. However, we need to come together in a range of key areas, from shaping smarter and more proactive policy making, which you have all touched on already, to deploying better standards and oversight. And this focus, I would argue, is more important than ever, because what is quite clear is that big fintech is here to stay, and it will become an ever more, let's say, omnipresent phenomenon in every aspect of our economies, our daily lives. I also take some encouragement, I think, from, for example, the European Union's Digital Services Act, which looks how to better oversee online content and boost digital competition, because let us remember, market economies function best when they are not dominated by singular or monopolistic or oligopolistic players. So we do need to take a closer look at antitrust actions, for instance, also against big tech that are currently being explored in the United States or in China. I mean, there is a great deal of introspection happening there at the moment. So to my fellow panelists, I don't want to stay in the way of the next panel that is also coming, but let me just say, for us as a development agency and as the development program of the United Nations, working in conjunction with UNCDF and many of our partners on the ground in countries, I believe it's critical that we get ahead of the curve and continue to shed light on these issues that have an enormous impact on the future of how developing countries will either leverage or be leveraged by big fintech. And UNDP and UNCDF will continue to work with developing countries to help design the kinds of policies that national jurisdictions believe they will need, while ensuring that we do not, in a sense, constrain also that entrepreneurial realm, that possibility of innovation. And I know that in your new capacity in Sanlam, that is perhaps exactly what you are now focusing on from the vantage point of those who actually can make this work. Because let's be clear, governments are not going to be the better big fintech operators. I think that much is clear. And finding that mixture of smart regulatory frameworks with a public accountability, but also in alignment with a developmental vision of a country, I think is going to be part of that social license to operate, never mind the platform on which one can move forward. And we have also our plans to continue to work through this newly established working group of developing economies that explores how best to advance country-specific solutions. Ultimately, this support will help set the conditions for big fintechs to positively contribute. And by that, I mean as much about jobs and livelihoods, financial inclusion, as it is about boosting human development in all parts of the world. And let us just take note again that what we see playing out over the last 72 hours with Omicron is just another illustration of how, on the one hand, we keep on invoking a global economy, a globalized economy, and yet in the face of perhaps the greatest challenge in making that global economy actually work for everyone, we are failing abysmally right now. We are failing abysmally. And I do look to big fintech also as being a part of the perhaps better way of doing things in the future, which is in its most basic way about access to vaccines right now. But actually, it is obviously, as all of you know, embedded in a far larger set of challenges. And I think here the digital frontier of development, of the way that we can work together and the way that we can move assets, resources, knowledge, capital across this global economy, not only to those places that naturally attract it, because that's where you have a, let's say, low risk, high return attraction, but actually an inclusive global economy, still remains the great prize of the 21st century, because otherwise we will fall apart over this. And I think that is an important thing to remind ourselves as we look at that prospect of big fintech. Colleagues, let me get out of the way of the next panel. It's a privilege to be part of this discussion. And again, I thank Patrick and Jerobo, and particularly also SDC for their great and visionary support that brought us to this point. And Ayaz, thank you to you and your team also, and everybody who contributed to the papers. Back to you.
Thank you very much, Akim. Thanks for your support. Asante Sana, thank you for your leadership, for also reminding us of the importance of bringing the voices of developing economies into this governance discussion. And I'll get back to that point with John in a moment. And thank you also for firing our imaginations right after lunch here, and also setting ever higher ambitions and goals for the dialogue. So we'll try to live up to your expectations and continue the conversation. Thank you very much for joining us and making time in your busy day. Thanks a lot. So I'd love to turn back to Natalie, because we were just talking about Natalie a second ago. And just before Akim joined us, we were discussing corporate governance. And Natalie, today in your new capacity, you're actually the Chief Digital Officer of Sanlam, which is one of the largest Pan-African insurance and investment firm. And in that capacity, you're also building partnerships with big fintechs like MTN, but potentially others. How much influence as a major partner, as a financier, as an investor, do you think you can actually have on the sustainability agenda of your organization, of course, but of these big fintechs you're actually partnering with? Can you enlighten us on this?
Thanks very much indeed, Ayaz. Maybe let me also reiterate, and thanks to Akim for sharing his thoughts. It is ever so urgent now that we deliver on the gains of financial sustainability, especially in the wake of COVID and the environmental risks that we're facing in the world today, and the impediments that they have on economic activity. But maybe very quickly, moving on to what you mentioned earlier, the risks of big fintech. Is it just teenagers that are driving technology? As having been appointed one of the youngest CEO of a corporate fintech in Africa in 2015, I can understand the prejudice that young people go through when they build big fintechs, and having faced enormous regulatory pressure from our central bank around whether or not these young people were doing the right thing. But let me say, I think young people do deserve a voice in writing the future that they'll live in. And I think one of the rise and the emergence of big fintech is actually that a lot of young entrepreneurial minds are not being given a voice in traditional finance and or traditional communication systems platforms. And so young people are taking the space in their hands to be able to rewrite the future in what they want to live in. But thanks, I think, to the advent of what we're starting to see in the Silicon Roundabout in Silicon Valley, open banking, for example, that actually allows big fintech ideas to be able to marry and integrate themselves into the traditional governance systems of what actually has been the core fundamentals of finance. And I think what we need to be able to see into the future is that collaboration that you were talking about. Of course, there are things around single market risks, structure that Priti mentioned. My question, though, would be when we actually look at market structure, if we look at today the ratio between telcos and consumers served, retailers to consumers served, oil and gas companies to consumers served, banks to people that are served, single markets have existed for time immemorial. That in comparison to the number of big fintechs and people that they're serving, I think we need to go back into history and take a leaf out of history as how to these things have been solved for. That brings me to my current role at the Sanlam Group and why I left a big fintech to go to a corporate financial services firm that has existed for 103 years, because it is ever so urgent that big fintechs are now integrated into traditional finance mechanisms where institutionalization and governance have tested the duration of time. And what we're doing at the Sanlam Group is trying to build together with MTN the largest financial services platform on the Africa continent. Our recent alliance that has been announced will allow us to reach 200 million customers on the Africa continent with the know-how of deep knowledge of financial products and services that we have been able to produce that deepen access to financial services on the Africa continent beyond just financial inclusion. And I think it goes without saying that we must see private sector stepping up. Private sector, particularly in traditional finance, must find mechanisms in which they can integrate with big fintech. And for Africa, maybe finally to say, there is a real big opportunity given the adoption of digitalization, what it means for formalizing markets, and particularly in the wake of COVID. Africa has the youngest population by 2020. by 2050. It also currently has the largest number of mobile financial services wallets globally, sitting at about 55% of what the world has, and is a growing economy. We have the single best chance in making big fintech work for gains that will drive sustainability, not just for financial inclusion, but also for climate action. And therefore, my new role is to figure out how we can scale big fintech in a regulated way across the African continent. Thank you.
Thank you very much, Natalie. And indeed, there are many young entrepreneurs in Africa, both men and women, actually really building those new platforms that can scale not just in their respective markets, but across the country. And it's great to hear that you're actually ready to support them and potentially even finance them and help them grow in a way that is sustainability aligned and that will deliver a better outcome for everyone in Africa and around the world. And that's fantastic news. So thanks very much for emphasizing and highlighting this. I'd like to turn back to you, Catherine, maybe on, again, connecting the governance of big fintechs with this sustainability discussion that we've been having from the beginning. One of the things I think that you highlighted in your reports and papers and investigations is that there's a sort of a disconnect of the governance of big fintechs with the broader ESG and SDG debate that's going on in finance, in particular today here in Geneva, but also around the world. And so how can we reconnect these two topics together? What are your thoughts on this?
Yeah, this was definitely a key focus, and even a finding before with the UN Secretary General Task Force on Digital Financing. We discovered, when I was with the GDFA, we discovered when we tried to create a granting system, we discovered actually that what we had was emerging technology for finance, fintech. We had green finance in the middle, and then we had emerging technology for SDGs and climate on the other side. And there was a disconnect even there in terms of how innovation was happening across those three sectors. Now, in terms of big fintech, what we have here is, of course, a majority of the discussion is about the finance side of things. But what we forget about are the other, well, we haven't forgotten about those in our papers, are the other governance frameworks, the voluntary ones. And we also have to remember that the SDGs and even the Paris Agreement are goals, and they're set for national level for government reporting. And we set these targets at a national level, but how do actors, big techs, other technology groups, other actors, NGOs actually report up to those is really key. And what we found was that the same technologies that are allowing big fintechs to scale out and be complex actually can serve to help make those former or those existing governance frameworks actually work in our favor. So the Global Reporting Index, for example, the SDG and ESG lens that we created. So what we have is a disconnect. We have reporting frameworks for customers, like information available for customers. We have the ESG lens for investors. We have the CSR lens for corporate governance. And it's voluntary. So what we can do is actually encourage and work with the big techs to actually incorporate and crisscross across those lenses, and using the data and information that is readily available, using emerging technologies, AI, IoT, and blockchain to make sure that this data is used in a way that is transparent but not visible, if you will, and allow us to integrate into these new and emerging governance frameworks and lenses that we can create out of this. One of the things I'm most proud of in these papers is that we realized that there are 3 tiers of impacts, and we created the SDG ESG lens, but also this tiered impact approach that I think is going to be very beneficial for core operations, for sort of integrated business models, and then for the global sort of scale and operations. And it's at that level that we realize that's where the breakdown of the current governance systems is starting to show its holes and where we really need to focus.
Yeah, and it was really important that someone actually starts uncovering these issues and uncovering that framework for understanding the impacts and finding ways of connecting that to corporate governance. And I'd like to actually hear your thoughts. Is it currently being connected to corporate governance in some ways, or are you starting to see corporate governance innovations that are promising or that are sort of showing us a blueprint for what might be possible in aligning big fintechs with sustainability, or are we still very far from it?
Sure. I think that in answering that, I'd just like to go back to our point of departure. My earlier point is that, again, all of these challenges tend to be looked at from a kind of a competition angle point of view. And that point of view tends to be, and of course, as we've seen, the ongoing dialogue in Europe right now, in China and US, also quite politicized and kind of subject to different political constraints, as we saw, for example, in the tax dialogue on tech companies. At the same time, as we talked about, I mean, these companies have grown to be, as you mentioned, too big to fail. And if we think back to corporate governance and its role in regulation after the post-financial crisis, a number of corporate governance standards have been imposed, notably through the OECD, but also through the Basel standards on banks, on specific addressing specific failings that were discovered at the time. So, for example, the introduction of a role of a chief risk officer in banks and whatnot. And what we're perhaps not seeing yet, I think, is sort of either international regulatory action, sort of like a supranational sort of standard that would tend to address some of the risks particular to tech and fintech companies in particular, at least for now. And there, I think it would be, again, personal in my opinion, it would be quite complicated perhaps to pull together the various political and other interests that are at play, as we've seen in the tax story that that finally got resolved in this minimum tax rate proposal with the OECD. But also, ultimately, if we think back to the level of regulators themselves, national regulators, so, you know, what have national regulators been doing to address tech-specific issues? And there, I think, also the answer is quite mixed. On the other hand, what is perhaps positive, and that's what we tried to highlight in the paper that was published just ahead of this meeting, was that individual companies themselves are in fact putting together and proposing innovative governance solutions, be they that the Facebook constituted board and others. Is that, in my view, kind of the pinnacle, or have we reached a level of, let's say, maturity in addressing the actual risks that fintechs face? Again, my personal opinion that it would not really be the case, because there are a number of inspirations that we can draw on from the financial crisis and the different tools and instruments and ideas that have come forth, but also from existing frameworks. For example, you know, the nomination of directors representing minority shareholders, other regulatory proposals that deal with consultation mechanisms, or even nomination of employees to serve on company boards, which is more of a kind of a direct measure that exists in France and Germany and other countries. So there are, I think, particular governance mechanisms at the level of the board, committees, for example, which is again an interesting point, because if you look at tech companies, I mean, if you look at the annual reports of tech companies, none of them actually, or very few of them, have a committee dedicated to dealing with tech risks or particular stakeholder-ish, or the type of risk that we're addressing. If I recall correctly, I looked at, for example, a couple of years back, or a couple of months back, Facebook annual report, and I think it has 3 committees of the board, none of which are particularly different than it would have had it been a shoe company based in Spain, you know? So I think that there is, of course, scope for these different practices that have been addressed or have been introduced at the national level to deal with particular risks, and also perhaps for some innovative thinking out of the box as to how these various different stakeholder communities can be included, perhaps not directly on boards, because let's face it, you know, a board of directors has a particular legal fiduciary responsibility and whatnot that can't just be sort of given away randomly to others, to other parties. But certainly interesting ideas could be come up with in terms of disclosure, in terms of also perhaps, and this was alluded in the conversation so far, perhaps at how governance mechanisms could be adapted at the level of different subsidiaries or national geographies where these companies have a particular impact, so that effectively, as Joachim, I think, was mentioning, that not all decisions are taken somewhere in Washington or in London are effectively just, you know, trickling down, but that there are also some sort of subnational or subsidiary governance mechanisms that kind of help to alleviate perhaps some of these issues.
So Definitely an area to explore a bit further, I would say. There's a
I'm
lot
biased,
of potential, but we certainly need to work with big fintechs to try to take up those governing arrangements and voluntary mechanisms to scale, in a sense, in really driving more sustainability into their businesses more systematically. I'd like to turn to John, and I'm conscious of time. I'm not sure we're going to have time for a Q&A with the audience. I was hoping to do that, but we might need to do that in the coffee break. John, you've been running recently a major conference at the BIS on big tech in finance and big fintech. What are the new ideas that emerge from those discussions? And to the point that Akim Steiner was making before, and I think Natalie mentioned that too, the importance of bringing developing economy voices into this governance debate. How are you currently addressing this?
Absolutely. So on the 6th and 7th of October, we did a big international conference on regulating big tech between financial regulation, antitrust, and data privacy. And that shows you that we've been thinking about the different implications that big tech entry in finance has on different policy areas, including beyond the mandates of central banks and financial regulators. So it was a great conference. You can watch all of the sessions online through the BIS website. And there were three broad outcomes that I wanted to discuss that I think are relevant for today's discussion. The first, I think, a very clear message that came out of a lot of the presentations was that academics who are working in this area, central bankers, do welcome the entry of big tech into finance. I think that should be made very clear. And I think we had Jason Furman from Harvard, for instance, who was talking about the experience of competition in different sectors. Making the case that the banking sector has been oligopolistic for a long time. Finance is expensive and has remained relatively expensive for a long time. There are rents in the banking sector. The banking sector is not serving certain communities. It's failed to serve communities for decades, and we've been trying as regulators to enhance financial inclusion, to break up the banking sector, bring in more competition. And we've tried since the financial crisis to do steps in that direction. But big tech and digital technologies more generally do offer this opportunity to really finally enhance competition, to bring new players in. And I think that it's very clear that this is a good thing. Of course, like all players in the financial sector, new players need to be regulated. But the message should be that this entry is a welcome thing in general, and that was something that came out very clearly from the discussions. A second thing that came out very clearly was just this range of different policy concerns. Again, we had some central bank governors, policymakers, high-profile academics. Darun Acemoglu, for instance, was there. He was talking about harms of AI, and thinking about where artificial intelligence is being used in financial services, including by big techs. There are all these issues around algorithmic bias that we're worried about. That algorithms might discriminate in new and poorly understood ways. Certainly, we're aware of the impact on the public discourse and on the media. And there are also issues, specific to financial services around, how data are being used. We also had a discussion of, what happens when a big tech knows more about a client's behavior than the client themselves. We're used to this issue of adverse selection that, we have to screen borrowers and all of this. But how does this turn we have inverse selection when, the platform actually knows more than the client? And there are consumer protection issues that are raised by that. So a very clear message, again, was bringing together the different policymakers that are thinking about this, and also bring civil society who are thinking about some of these consumer harms, who are thinking about these different aspects. And then a third outcome that I think is very relevant to the latter part of your question, Ayaz, was about bringing in developing country perspectives. Not only because these are important for developing countries, these issues, but also because developing economies are at the forefront of a lot of these issues, and can tell us things that in advanced economies matter a lot as well. So a lot of advanced economies are thinking about what will happen if DM takes off, if a big tech becomes very large in markets. And a lot of developing economies have already been there. Big techs are already very large. They have policy actions they've already taken. So we heard, from Dilip Aspe, who's the CEO of the National Payments Corporation of India, about the measures that they've taken in India with digital ID and Aadhaar and the fast payment system, but also how to make sure that a small number of players don't dominate the system, and the kind of caps they've introduced to try to ensure greater competition among providers. We heard from Elsie Ado Awadsi from the Bank of Ghana about the QR codes they've introduced in Ghana and how this has created a platform that enhances competition and interoperability, makes big techs compete with banks and fintechs, all on an even footing. And we heard from Roberto Campos Neto, the central bank governor of the Central Bank of Brazil, about PIX and about their thinking on central bank digital currencies. And I think one very key lesson from the experience of developing economies, emerging market developing economies, is that these public infrastructures like digital ID, like fast payment systems, and like now central bank digital currencies can be especially powerful in harnessing the benefits of big tech and of competition and of different players while mitigating the risks. By creating this public infrastructure where all the providers compete on an even footing, where they have to use the same standards, where they have to provide their services in a way that is interoperable with their competitors. That's a way that we can really enhance, harness these network effects, harness the good aspects of big techs that we want, while mitigating some of the risks of walled gardens, of siloed ecosystems, and really trying to mitigate some of those harms. So again, I think that there's a lot of value in dialogue, in learning also from the experience of emerging market and developing economies. And I think that there's a lot of value also for advanced economy authorities in listening closely to that experience.
Thanks, John. I could see Natalie smile on the screen when you were talking about learning from developing economies. And I think we all do agree that many developing economies are actually ahead of the game when it comes to governance models and new ways of regulating big fintechs and new type of business models. And at the same time, they're often at the receiving end of the impacts and the effects, positive and negative, of platforms emerging from other jurisdictions and being governed and regulated in other jurisdictions. So I think that cross-fertilization and cross-pollination between regulators from developing economies and mature economies is extremely important in making sure that we have convergent responses. And with this, I'd like to try to bring that now a little bit to a closure with Doug, who's been listening patiently. What's the way, a question to you, Doug, what's the way, we've been discussing many issues. We've been discussing tools we have available. We've been discussing the role of corporate governance. We've been discussing how important it is to map big fintech impacts against SDG and ESG lenses. What's the way forward? What are the concrete steps that we should go away with, that we can all take together collectively in really ensuring that big fintechs are going to really benefit the world that we live in and the world that the next generations are going to be living in? Over to you, Doug.
Thanks for that, Ayaz. And I think the key point that if we look at the past 2 years, we've seen this tremendous benefit emerging from a combination of scale and digitization. So that's one side. The second, and I think this has been one aspect of the COVID experience, is a rapid coalescing around a focus on the importance of sustainable development. But as I think Akim highlighted very importantly, 2030 is not far away. And I think when we look at a framework for looking at this issue, the first is to realize that digital finance is key from a standpoint of resilience to not only this crisis, but future crises. So that's our foundation. The second is making sure that the financial system functions, that it is able to get resources across an entire population. This is really essential from the standpoint of addressing challenges as they arise. And the third is really thinking about how can we move the financial system beyond just resilience, access, risk, to actually focusing on supporting broader development. So I think that's the sort of framework we're looking at. The second is really focusing in on certain strategies. And if we think about the first of these, it's really the impact of digitization. And in some ways, what we've seen is that private companies have been a way to get digital access to very large portions of the population, which has had tremendous benefits. But the business model that enables this to happen is essentially based on data and services that are provided over the infrastructure that those companies are building. So it's a sort of, we're taking advantage of the incentives of business, but at the same time, from the standpoint of the natural outcome, from the standpoint of concentration, it's something that we have to balance. The second is around infrastructure. And at what point do you move from thinking of something that this is business to this is actually a form of infrastructure, and you need to be treating it differently than if it is simply a business operation. And I think that this is one of the key points as we go forward. The third is around this idea of aggregation. How do you maximize benefits of aggregation? And the simplest strategy has been to allow private amalgamations of data. Open banking is an alternative. Likewise, shared resource data approaches like are being developed in China. These are different approaches to the way that one can get the benefits of data aggregation, ideally, however, without the network sort of concentration effects. So that's our third. Fourth is really around security. The more we digitize, the more benefits, but at the same time, the greater the risks. And I think that this is absolutely essential. And that really takes us from the framework to our sort of focus strategies to the questions around dealing with individual companies. And I think we can think about this really from the international level and the domestic level. And it's also important to realize that our starting point, we want to, as John has said, encourage competition. You want to make it as easy as possible for those firms that, as we characterize, too small to care, to enter in and improve finance. But as they get bigger and bigger, as they edge towards too big to fail, one needs to treat those differently, both domestically, but also internationally. And I think the key aspect from the standpoint of the international process is seeking to distill lessons from different experiences. And we're seeing competition between different approaches. We're not saying that there's a single approach at this stage, but then eventually coming out with principles and standards. And certainly when we are dealing with very large-scale cross-border firms, the need for a coordinated cross-border approach. And of course, we've seen this with globally systemically important financial institutions. We're seeing it now in the context of approaches to global stablecoins. Finally, if we turn to the domestic level, I think what we've all seen is very much the need for cooperation and coordination across different agencies that have different responsibilities. And essentially, the increasing approach I think that we're seeing is the need to build committees, councils at the domestic level that are bringing together financial regulators, data regulators, competition regulators, and tech and communications regulators to try to look at how they can maximize the benefits while at the same time continually monitoring and balancing risks. Not an easy process, but I think as we look at the scale of the opportunities, but also the scale of the challenges, there's really no other choice.
Thanks very much, Doug. We can certainly draw a lot of inspiration from existing mechanisms, from public utility designation to designation of systemically important financial infrastructure organizations, for instance. And some are even referring to potentially a global digital stability board, which are some exciting topics and exciting models to actually explore in that space. We have only a few minutes left. Preeti, I hope we still have you online with us. You've been listening through very patiently and attentively. I'd like to really invite you to share with us a few closing remarks and some words of wisdom to close us off, if you're still there.
Of course, I'm here, Ayaz, and been
Thank you.
listening very attentively and so impressed by your work and all the panelists here, and going from regulation to governance to developing countries, and all the comments we heard from Akim and Doug and Natalie. So let me try to perhaps just round up some perspectives. As you may know, or for the audience, I am proud to manage the UN Capital Development Fund as its executive secretary. The UN Capital Development Fund is a fairly unique part of the UN where we have a financing mandate, a capital mandate, and within that, a big focus area on digital, inclusive digital economies. And we are also mandated to serve largely the 46 least developed countries. So in this debate, some of the points that Akim raised about the importance of leaving no one behind, inclusive digitization, certainly I think is something we focus on. And this whole discussion on big fintechs, as you know, we've discussed, is of great interest and importance to me. I think the big fintechs have a big role to play, but of course, all the other issues we discussed on governance, regulation, need to come into the discussions as well. Just conceptually, the roles I would see, for example, we have countries out in Asia Pacific, so the Fiji and the Samoa and Tuvalu Islands. So the idea is, can big fintech arrive in these islands and figure out a connectivity for these widely spread islands with thinly sparse population, but which still need certain amount of development and connectivity. So that's a challenge for big fintech. If I look at Asia, Cambodia, I wanted to bring up that we talked a little bit about digital currency. So the Central Bank of Cambodia has launched Bakong, and it's interesting to see that currency and to see developments. But again, the role of big fintech in currency. And the reason we are interested in that is, how does that impact remittances, cost of transferring money? Is that a solution? So again, tech and of course, big fintech have a role to play in development. And then of course, when we come to Africa, where we serve at least 33 of the sub-Saharan African countries, Uganda, Tanzania, etc. A big challenge posed to us is, can't you really transform these countries by using digitization? And let me leave that on the platform here for Building Bridges to say, yes, let's try to make that happen. Let's help these countries leapfrog certain stages of development by bringing to them the current technologies, which some of the countries on the more developed path didn't have the benefit of. So, we've been doing good work on inclusive digital payments, making sure women entrepreneurs, inclusive even migrants try to have livelihoods by the mechanisms of tech. And therefore, very, very relevant. I wanted to bring this more sort of a practitioner's view into this debate, and perhaps challenge you to look at all your deliberations, and then let's implement some of that into these countries for the benefit of the people. People are suffering, as you know, currently, particularly with the Omicron. It's another impact on lives and livelihoods. I had several prepared notes, but I think the panelists, Akim, yourself, Ayaz, have covered lots of the points. But I did want to just reiterate that the dialogue has outlined 5 high-level principles to guide policymakers and regulators in building big fintech governance framework that supports sustainability or sustainable development. And that those are, first, ensure financial stability, financial integrity, consumer and investor protection, and market integrity. That's point 1. Point 2, develop reflexive and iterative regulation. So that's point 2. Point 3, foster responsible actors. Point 4, ensure appropriate and proportional oversight and enforcement. And point 5, instill a commitment to sustainable development. So all very relevant to what I've been just saying, and of course, a framework in which to bring these big companies, great amount of intellectual capital there, to help humanity, help the countries reach a basic standard of living. That has always been the goal, that everybody has a basic standard of living. So let me close by referring to the vision of UNCDF. Our new strategic framework will be launched next year. The vision is to leverage the development impact of capital to strengthen the sustainable growth and inclusiveness of LDC economies to enable them to achieve the SDGs. The term capital refers to more than financial capital. It applies to innovation capital. It applies to digital capital, and it applies to cooperation capital that emerges by collaborating stakeholders. These are the forms of capital that can be leveraged through our working together in the dialogue. Ayaz, colleagues, panelists, thank you so much. And thank you to Building Bridges And Abiento, Geneva. Over to you, Ayaz.
Thank you very much, Preeti, for your continuous inspiration and leadership, and for reminding us of the opportunity to leverage big fintech in developing economies and island states and many other LDCs in really accelerating sustainable development and leapfrogging towards a more sustainable future and prosperous future for all of us. So thanks very much for these words. Perfect words to close us off. Thank you also to my fellow panelists here on site, to you, Alisa, Catherine, John as well, and online we have Natalie and Doug. Thanks very much for your contributions to this important work. I look forward to continuing it. Thanks to the audience for participating on site, online, and if there's any questions from the audience, I'm sure panelists will be happy to address them during the coffee break. So thanks a lot for being with us today, and I hope to reconnect with everyone soon. Bye-bye.